Hello, I'm John Cunningham, and welcome to the RedChip Money Report. For those of you new to the show, RedChip is an investor relations, media, and research firm focused on emerging growth companies. Our unique platform combines global multimedia with traditional investor relations, reaching investors around the world. Now, today's show features interviews with executives of several public companies. First, you'll see an interview with the president of Indonesia Energy. Their stock symbol is INDO on the New York Stock Exchange American. Indonesia Energy is involved with high-growth energy projects in Indonesia. Later, you will learn more about their oil and gas drilling projects in Indonesia. The next interview is with the president and CEO of Sierra Metals. Their stock symbol is SMTS on the New York Stock Exchange American. Sierra Metals is a premier Latin American precious and base metals producer. Later, you will learn about their 3 mines in commercial production and plans for growing operations. Then we will go to our interview with American Manganese, stock symbol AMYZF on the OTC. American Manganese is a critical metals company. They primarily focus on recycling lithium-ion batteries with their breakthrough patented process called Recyclico. The next company featured on today's show is Pyxis Tankers, stock symbol PXS on the NASDAQ. Pyxis Tankers owns a modern fleet of 5 tankers engaged in seaborne transportation of refined petroleum products and other bulk liquids. Later, you'll see an overview of their operations and their expanding company. The final company featured today will be Lumina Gold, stock symbol LMGDF on the OTCQX. Lumina Gold is a Canada-based precious and base metals exploration and development company. Later, you will learn about their day-to-day operations that are focused on the Cangrejos gold and copper project based in Ecuador. Now, before we get to our first interview, our quote of the week. It comes from the book Small Stocks, Big Money. Be wary of bad management teams, don't bet on dreams, do your homework and be careful. If you don't have time to devote to doing your own homework, better to have someone manage your accounts for you. This quote comes from Dave Malley, a fund manager featured in Chapter 5 of Small Stocks, Big Money. This is a book of exclusive interviews with some of the biggest players in the microcap space. You can order your copy today at redchip.com or on Amazon. Now let's get started with our first interview today with Indonesia Energy.
Frank, thanks for being with us today.
Sure. Thank you, Dave.
Let's start with a brief overview of the history of your company and also your background.
Sure. Thank you. The company has been around for about 5 years right now, and it was always owned privately by 2 individuals with very large other businesses in Indonesia, significant businesses, but they wanted to get into the energy business. So they started this company 5 years ago, acquired some assets, and I joined them about a year ago. We'll talk, I guess, a little more about the assets themselves, but a little on my background. I've been 41 years in the industry. Started at Texaco Inc., had a wonderful 23-year career at Texaco, and exited Texaco. I was president of Texaco International Operations and ran the international operations for the company. Had a great, great career. When I exited Texaco, this is very interesting because when I exited Texaco, the largest producing asset in the world for Texaco was in Indonesia. And Chevron, which acquired Texaco, the number 2 largest producing asset in the world for Chevron was Indonesia. So together, we were producing 1 million barrels a day. And as Chevron notes on their website, they've produced 12 billion barrels from Indonesia, $1 trillion in cash flow. That's how important, that's how significant Indonesia is in the world. But people don't know that. And so that's the story we gotta get out there. That's why I joined 1 year ago when we were a private company. And then we went public on the New York Stock Exchange, the first IPO ever done by an Indonesian company in history on either the New York or the NASDAQ. We did that on December 19th, last IPO of the year, which meant also the decade. So we're ready to go. We're ready to start developing our assets. And, this is a great part of my career now to get back into the international business after starting 2 startups on the New York Stock Exchange, get back into the international and do what I can for this company and for the shareholders to create shareholder value.
Well, that's a great background, your experience at Texaco, working in Indonesia. Talk to us about the 2 assets operating in Sumatra and Java. What are the production plans and the expected timelines?
So we have 2 assets. One is on the island of Sumatra, one of the large islands off Indonesia. And just as a background, Indonesia is the 4th largest country in the world. after China, India, United States, and then Indonesia. And a 50-year history in the energy industry. And as I mentioned, Chevron Texaco having produced 12 billion barrels there, most of it on the island of Sumatra. So that's where one of our assets is, 63,000 acres. We've got 4 wells producing, and it's producing about a little less than 300 barrels a day. But that provides enough cash flow to run the company, cash flow even. Just to jump over to the other asset, as you mentioned, is on the island of Java. Java is, and we're in the west part of Java. There we've got an asset with 1 million acres, just 16 miles from the capital city of Jakarta. 1 million acres, as a perspective to people in the United States, would be 70 times the size of Manhattan Island. So 70 times the size of Manhattan. Only think of it 16 miles from Manhattan. So that's a big natural gas play. The one in Sumatra, oil, this one, natural gas. So there are 2 major assets, but going back to the one on Sumatra, where we have 4 wells producing, we've announced, and we'll have more announcements on this, that we're going to take the proceeds and drill 6 wells over the next 12 months, or even less, by the end of this year, 2020. What will that do to the company, those 6 wells? Well, each well alone will start producing about 190 barrels a day. And we're at about 200, a little less than 300. That, 2 wells more than doubles the production and the cash flow of the company. So what you'll see from us over this balance of this year is announcements saying we drill 2 wells and we more than double production and cash flow. Then about a month or 2 later, we drill 2 more wells, double production and cash flow again. And then the same thing again. So, there's a lot of milestones, a lot of announcements there that'll be made on that, and it'll have a dramatic difference in terms of cash flow and production to our companies.
What are some of the key challenges in operating these assets in Sumatra and Java?
Yeah, so the one in Sumatra is pretty straightforward. It's already a discovered field. We've drilled wells there. We know the cost of drilling wells. We're right now getting the permits from the government to proceed with the drilling of the wells. That'll probably be an announcement coming up soon, that we've received full permits and that we're ready to contract a drilling contractor that'll start drilling there. There aren't really too many challenges there because we've done it before, and these will be production wells. So we'll just move forward, drill 1 well, then that rig will just move over, drill another well. Very seamless operation. 1.5 million a well. We expect to receive 2.1 million in net cash flow after 12 months from that well. So more than the cost of drilling. So these are 100% rate of return wells that we'll be drilling. So, a very easy, we don't foresee any real challenges there. But people ask, what's your cost of production? How low can you still produce profitably with oil prices? Well, we have an operating cost, full in production cost, an operating cost of only $21 a barrel. So it gives you sort of a sense, even though oil now is in the high 40s in the Brent, we can easily produce and make money at that kind of a price. And they price it in Brent and in dollars is what we get paid. On the island of Java, the 1 million acre block, that's a natural gas play. We're blessed because Indonesia is buying the gas. We're only 16 miles from the capital. Gas prices there are 300% greater than the natural gas price here in the United States. So a really great margin there. Infrastructure and pipelines have been developed. We'll do some more on-ground work like seismic and other kind of developmental kind of appraisal type of work. And we expect to drill our first well within about 12 months and then start drilling on that asset. That's sort of the big, huge elephant opportunity for the company, potentially worth billions of barrels of oil.
You recently raised capital of $15 million. How will you deploy this capital? How long will the capital last?
Sure. So right now, with the 4 wells we're producing from in Sumatra, that basically makes the company cash flow even. So these 6 wells will cost $1.5 million each. What we're going to do is take that $15 million, and we have plenty of money from that $15 million raised, even netting out all costs and expenses, to drill those 6 wells. And what will that do? That will just quadruple, really, of almost quadruple production for the company as an exit to 2020. So we'll start taking that cash flow to either drill additional more wells there or go over to Java, drill some wells there. So we don't see a need to go into the capital markets for quite some time. We've got enough cash. from only that $15 million because that will just use to generate more cash flow. So we're going to deploy all that, what I say, to the drill bit. Drill bit, drill the wells, produce oil, and produce cash flow and production to the company.
To recap, what's the essential value proposition for investors? Why should they consider owning your stock today?
Sure. I mean, what companies, the energy companies have been beat up over the last few years, and the drop in oil prices last week doesn't really help. However, what you got to do now is look for companies that are in the right space at the right time. And where we are in Sumatra Island with our oil production and 6 new wells we're going to drill, these aren't shale wells like in the United States. I founded a company drilling shale wells. It's still doing very well, but the rates of return there, the cost of production is so high. We're drilling straight conventional wells, straight down 3,500 feet, pretty shallow, no horizontal drilling, no fracking, very simple operation. So there aren't too many companies that are going to be able to go out there, get the price of Brent higher than what's being paid in the United States, costs you only $21 to produce, selling it for $40, $50 right now, probably going up to $60. So, they're going to see a company here that's going to quadruple in its cash flow and production, and with a margin that's a very dramatic margin. So, I think that offers it. And then the asset in Java, it's a 1 million acre asset with a huge natural gas potential. A Canadian public company, will drill 4 major discoveries on that property. We're going to take that, parallel those discoveries, drill those wells again. And that is what, when I was at Texaco, those are called elephant field opportunities. They're just humongous potential assets. That will cost hundreds of millions of dollars, but that's down the road a few years. So we'd love to have that issue of having to raise $400 million to produce billions of dollars of cash flow. So that's a great, huge upside for the company. But short term, we're going to have hitting milestones. We're going to have announcements coming out every few weeks talking about, we just drilled a well, we just finished drilling a well, we just doubled production. Drilled 2 more wells, double production. So that's why I think we're a bargain right now at the price in the stock market.
Frank, thanks for being on the show today.
Sure. Well, thank you very much. Thank you.
Now, to learn more, or if you have any questions about Indonesia Energy, please give us a call at 1-800-REDCHIP to speak to a specialist, or you can email us at info@redchip.com. RedChip also has a weekly newsletter. You can subscribe at redchip.com to receive emails about our latest companies and their updates. The next interview is with the president and CEO of Sierra Metals.
Igor, thanks for being with us today.
Thank you, Dave. Nice talking to you.
Well, let's start today with your giving us a brief overview of the history of the company.
Yes, the history of the company is we started by forming Diabras, Mexico. With that, we bought 2 mines in Mexico, the Cusi mine in the state of Chihuahua, as well as the Bolivar mine in the same state. Later, we purchased the Corona company here in Peru. And with that, we formed Sierra Metals around 2012. And we've been operating with these 3 mines since.
So you operate 3 projects in 2 countries. Talk about the geology of these mines and what are their primary metals and how do they contribute to your revenue mix?
These 3 properties sit on about 110,000 hectares in prime geological country. In Peru, we have about 22,000 hectares, and in Mexico, we have about 90,000 hectares in very fertile, geologically speaking, country. And in Peru, our operation is an underground operation, polymetallic, sitting on 3 major faults that go along our property with lots of brownfield and greenfield potential, and which we are benefiting from. And in Mexico, we are in 2 locations right now in terms of operations, but we have other locations that have tremendous geological potential, like in Guerrero, in Sinaloa, as well as Chihuahua. The metals we mine in Peru are 5 metals. We produce a copper concentrate with silver and gold values, a zinc concentrate with silver values, and a lead concentrate with silver values. So we produce 5 metals in Peru. In the case of Mexico, one of our mines, the Bolivar mine, produces copper with gold and silver values quite significantly. And in the case of Cusi, it's essentially a silver mine with some lead values in the concentrate. Our production in 2019 was about 267 million pounds of zinc equivalent. And in the case of copper, we produce about 112 million pounds of copper equivalent production, while in terms of silver equivalent was close to 19 million ounces.
Describe your growth strategy for us.
The growth strategy is based on an extremely fertile geological setting. Then we put a lot of emphasis on our brownfield exploration. We put on average in excess of 60 to 70,000 meters of brownfield exploration drilling. With that, we do on a periodic basis a review of our resource and reserves and resources. This year, for example, we're upgrading once again our 43-101s, one for each mine. We already finished the one for Yauricocha, where we increased the quality of our reserves. And we're finalizing the one for Bolivar at the end of this quarter. And during the second quarter, we'll finalize the one in Cusi. And this is all the result of our brownfield exploration. We upgrade our resource base and the quality of our reserve. And then we move to the next phase, which is the mine expansions, which we have been doing on a steady basis over the last few years. Last year, 2019, we hit every mark in our expansion process. We hit 4,000 tons per day in Bolivar, 1,200 tons per day in Cusi from previous 650. And in Yauricocha, we did 3,150, but this coming 2020, we're gonna stay in Cusi at 1,200. We're gonna move Bolivar from 4,000 to 5,000, and we're gonna move Yauricocha from 3,100 to 3,600, a 20% increase in capacity. And so all of our exploration efforts translate into new production, increased production, lower costs, and therefore benefits for our shareholders.
In closing today, I want to talk about the essential value proposition. Why should investors take an interest in your company today?
We are profitable at current prices, meaning that our operating costs are quite competitive in all three facilities, more so in Yauricocha and Bolivar. Cusi is a young mine that is still upcoming, but we'll get there. And so our realized prices in 2019, for example, exceed the market prices for all metals, and therefore we have a strong position. Just to give you an example, our cash position right now is $40 million. Our adjusted EBITDA for the first 9 months in 2019, $46 million. And our fourth quarter in 2019 was a very strong quarter. However, we haven't published that yet, so I cannot talk about it, but we are translating the expansions into economic value, and therefore that means more value for our shareholders.
Well, it's a great story, Igor. Thanks for being with us today.
Thank you, David.
Now, to learn more, if you have any questions about Sierra Metals, give us a call at 1-800-REDCHIP to speak to a specialist, or you can email us at info@redchip.com. RedChip also has a weekly newsletter. You can subscribe at redchip.com to receive emails about our latest companies and their updates. Now let's get on to our next interview with American Manganese.
Larry, thanks for being with us today.
Well, thank you.
I want to start with your giving us a brief overview of the history of the company and a little bit on your background as well.
Okay, I'm Larry Ray, the president and CEO of American Manganese. We have a branded product called Recyclico, in which we're involved in recycling lithium-ion batteries. And the history on that is that we developed a process with the Cometco, who's our research firm, a contract research firm, treating low grades of manganese, and which is a critical metal. The saying is, you can't make steel without manganese. If you can't make steel, the world stops. And that's one of the most critical metals in the U.S. spun off of that. That was a cornerstone of our recycling progress that we're doing right now. And we've gone through patenting 2 patents on it in the U.S. We've applied for 7 more patents in other countries. And we've completed a pilot test, which has significantly reduced the risk in the company. And we've gotten close to 100% recoveries and purities.
You recently received funding from the government of Canada for a lithium battery recycling project. What does this mean for the future of the company?
That funding actually is a door opener for us. It's not a large one, and but it took a long time to get it through the bureaucracy. And once that's done, we can apply for much larger grants, and we hope that that's going to help us commercialize the plant.
I want you to elaborate on your robust patent portfolio.
Well, our patent portfolio consists of a patented process where I've mentioned we get 100%, up to 100% recovery and 100% purity, but also it's a closed circuit. No water goes back into the environment, so there's no waste with that. There's there's nothing going into the air, and so it's a circular economy. It's a perfect solution for any battery manufacturer that wants to hold themselves up as being, a responsible citizen when it comes to the end-of-life batteries.
What is your timeline to commercialization?
Well, that's a tough one. We got to raise some money in order to do that, and we think that's on the horizon. I won't say exactly when, but once we start, it'll take about a year to build the plant. And just because it's a small 3-ton-a-day plant doesn't mean it doesn't have some detailed engineering and special orders for tanks and sizing of pumps and all those different things that are required in a plant. Once we start down that road, we should take about no more than a year to build out the plant and start commercial production.
Who are some of the key players on your management team?
Well, the key players are, we have a very small management team here, 4 people, and they're all key. The one that works the closest with me is Zarko, who's our Chief Technical Officer, CTO. And then we have our CFO, Shaheem, and we have Terry, who's our Corporate Secretary. We have a great board of directors that understand the public markets. We have an advisory committee, and we have a financier that has put a lot of money into the company, David Langtree. Also, we've got Daniel McGroarty, who's in close contact with the U.S. government at all times, so we know everything that's happening there. Through him, we managed to get involved with the Department of Energy, and we are part of a program for recycling batteries.
So that program for recycling batteries, are you generating revenue on that program?
No, that's a research and development. We certainly bring to the table the actual metallurgical side of it, and we're there mostly to learn a little bit about the dismantling of batteries, and so that's our key interest there.
And what is the market size that you're actually addressing?
Well, that's open for debate, but we estimate that there's probably $300 or $400 million worth of end-of-life batteries and scraps that are available today. So that's a good business start. We're looking at the scrap size because we don't have to dismantle the batteries, and the scrap is what we consider low-hanging fruit. And as soon as we get the plant built, we could start treating scraps.
Why is your metallurgical process different and better than your competitors?
Well, we have a metallurgical process that we've patented. It was taken off of our manganese process, and nobody else can have that process. Anything else that they're trying is usually peroxides, which have innate problems. So does solvents and other methods that they're using. I guess they're probably using organics to do some of their recoveries. They're not very forthcoming. They're not transparent like we are. So it's hard to compare apples and oranges here.
Well, Larry, thank you so much for being with us today.
Well, thank you.
Now, to learn more, or if you have any questions about American Manganese, give us a call at 1-800-REDCHIP to speak to a specialist, or you can email us at info@redchip.com. RedChip also has a weekly newsletter. You can subscribe at redchip.com to receive emails about our latest companies and their updates. Now let's move on to our next interview with Pyxis Tankers.
We're here with the CEO of Pyxis Tankers, Eddy Valentis. Eddy, thanks for being with us today.
Thank you, Craig. Thank you for inviting me.
Pyxis owns a modern fleet of tankers transporting refined petroleum products and other bulk liquids. Let's start with a brief overview of the business.
Yes, Pyxis Tankers is a company carrying refined products only. We do not do crude. We carry products such as diesel, naphtha, jet fuel, even veg oils. Our vessels are very sophisticated. Our company is based in Athens, Greece, and we've been listed since 2015 at NASDAQ. The company was set up back in 2007. And since then, we have substantial customers in our book, such as all the big majors and many traders as well.
Looking at the big picture, Eddy, what's the essential value proposition? Why should investors take an interest in Pyxis today?
The market fundamentals. This is the big story developing. Supply and demand equation looks very good for the near future. And for the next couple of years, we think that it's going to be a very good market for tankers, especially for product tankers. Also, our stock is very much discounted to NAV, so it's a very, very good proposition for investors.
Let's talk more about the business model of Pyxis. How does the company make money?
The business model is quite simple. We like to have projected cash flows, so our vessels are employed both on time charters and spot, so we can take opportunity of spot market peaks whenever that happen. But our basic model is to have visible cash flows, therefore we have vessels also in period employment.
How big is the market opportunity, Eddy? And what sets Pyxis apart from the competition?
We think we have a good business model. Our operating costs are substantially lower than our peers. So we have a very, very structured company, very well structured company, good management, with years of experience in shipping. And it's an emerging growth company. So also management owns a substantial part of the company, a lot of stocks. So our interests are closely aligned with those of shareholders. So we believe we have a very good company to offer.
Let's look to the future a bit, Eddy. What can investors expect from Pyxis in the next 12 months?
Pyxis is geared up and ready to, as soon as market conditions allow it, to engage in growth. I mean, it's a small company, a micro cap, and we want really to grow the company within this year. Considering the potential of the market for the next couple of years, we think it's a good entry point, and at this stage, Pyxis should be growing. Of course, it's all a market, it's all subject to investor appetite for shipping stocks, especially for micro-cap companies such as ours.
To recap, Eddy, what's the main takeaway for investors? Why should they own your stock today?
I think gradually investors should look at Pyxis stocks. As I said, the stock is substantially discounted to NAV. It's a good opportunity. The market fundamentals for the next 2 years look very good. Supply and demand fundamentals are really good. Supply side, we see very few vessels coming in the next 2 years. And also demand-wise, we think that it's a very good opportunity, very good market prospects ahead, considering the new environmental regulations and also the general demand for refined products across the world.
An interesting story, Eddy. Thanks for being with us today.
Thank you, Craig. Thank you very much.
Now, to learn more, if you have any questions about Pyxis Tankers, give us a call at 1-800-REDCHIP to speak to a specialist, or you can email us at info@redchip.com. RedChip also has a weekly newsletter you can subscribe to at redchip.com to receive emails about our latest companies and their updates. Now let's move on to our next interview with Lumina Gold.
Scott, thanks for being with us today.
Yeah, thanks for having me, Dave.
I want to start today with your giving us a brief overview of the history of the company.
Sure. So the Lumina Group was founded way back in 2003. We've worked on a variety of public companies, but on this one specifically, we've been in Ecuador since 2014, working there, and the Cangrejos project has grown a lot during that time period. So, we've been drilling since about 2015, and we've taken it really from having zero resources to over 17 million ounces these days.
In November of 2019, the company released a mineral resource summary indicating that Cangrejos, the deposit there, has over 1.2 billion pounds of contained copper. What's the expected lifetime of this project, and how many other minerals are in this deposit?
Yeah, so the copper is actually the byproduct, believe it or not. So that was the indicated copper. There's also inferred copper. So there's about over 2 billion pounds of copper at the deposit and about 17 million ounces of gold. So it's about 80% gold, 20% copper. And it's about the 38th largest primary gold deposit in the world right now.
What are some of the corporate milestones investors can expect in 2020?
Yeah, the biggest one, Dave, is going to be the refresh of the economic study that's going to come out here in May or June of this year. And that's really going to take that new big resource and put a new mine plan in it, as well as a bunch of other efficiency improvements we've made over the last 2 years. So that'll show, even more improved economics than the already fairly robust study we put out in 2018.
You recently raised $9 million. How will you deploy that capital?
Yeah, so that's going to go into the study and all the engineering work we're doing that'll come out middle of the year. And the group's history is really to de-risk these projects and then look to sell them to major companies because they're quite large projects. So that'll be the game plan here for 2020.
Tell us a little bit about your management team and your board of directors, particularly their past successes in the mining industry.
Sure. So our CEO, Marshall Koval, he has a consulting background and used to be the president of Pincock, Allen & Holt. Did lots of mining due diligence studies for banks and different financing groups. Our head geologist, Leo Hathaway, who's been with the group as long as Marshall has, coming up on 20 years now. He's used to work at Inmet and has worked across all our public companies. So the group sold about 7 public companies over that time period, and right now we have 3 current public companies in the group, 2 focused in Ecuador and 1 focused in Finland. And the board of directors, equal levels of experience, if not more in some cases, and the group's really underpinned by our founder, Ross Beatty, who holds 20% of Lumina and took a big portion of the financing you mentioned there in December for the $5 million of the $9 million that we raised.
Now, Lumina Gold Corp is committed to the sustainable development of mining projects. You have a lot on your website about your corporate and social responsibilities. Let's talk about that a little bit.
Yeah, sure. So, our deposit, there's no communities directly on the deposit, but, the nearest town is approximately 7 kilometers away. We think it's pretty important, obviously, to have good relationships with the community right out of the gate, even when you're in the early stages of developing a project. So we work with them on community projects, greenhouse initiatives, reforestation, a variety of different things, as well as providing a lot of jobs for the local community. So building that social license, building that support early with these type of projects is very important. And then when it comes to the project itself, we're looking at a lot of ways to reduce the impact, things like dry stack tailings facilities instead of conventional tailings facilities, and a variety of things really to make the project, as low impact as possible.
To recap, what's the essential value proposition for investors today? Why should they take an interest today in your stock?
Yeah, it's an emerging mining market in Ecuador. A lot of positive changes there over the last 5 years. We've now got 2 big scale mines producing there. You've got a massive gold deposit that we have here in Cangrejos that we're driving towards development. And we really think that a major gold company is going to look to acquire this type of project in the near term. So, I think that all those things will help drive the value forward.
Scott, thanks for being with us today. It's a great story.
Yeah, thanks for having us.
Now, to learn more, if you have any questions about Lumina Gold, give us a call at 1-800-RedChip to speak to a specialist, or you can email us at info@redchip.com. RedChip also has a weekly newsletter. You can subscribe at redchip.com to receive emails about our latest companies and their updates. Now let's do a quick recap of the companies you saw today. First was Indonesia Energy, stock symbol INDO on the New York Stock Exchange American. Indonesia Energy is involved with high-growth energy projects in Indonesia and is well-positioned for the upside moving forward. Then Sierra Metals, stock symbol SMTS on the New York Stock Exchange American. Sierra Metals has 3 mines in commercial production and is looking to expand operations moving forward, yet it is still under Wall Street's radar. Then you met American Manganese, stock symbol AMYZF on the OTC. American Manganese's breakthrough patented process called Recyclico is an innovative solution for recycling lithium-ion batteries. Now, this is an area that's expected to continue to grow for years to come. The next company featured on today's show was Pyxis Tankers, stock symbol PXS on the NASDAQ. Pyxis Tankers' fleet of 5 modern vessels transport refined liquid petroleum products around the globe. With plans to grow the fleet, long-term outlook for Pyxis remains bullish. The last company was Lumina Gold, stock symbol LMGDF on the OTCQX. Lumina Gold is led by an experienced management team that has a successful track record of advancing and monetizing exploration projects. Their current gold and copper project in Ecuador continues to move forward and presents a compelling opportunity for investors at current levels. If you have any question about today's featured companies, call us at 1-800-RedChip, or you can email us at info@redchip.com. I want to thank you for being with us today, and remember, while small caps can provide significant gains, you must be prepared for the downside. Some of the companies featured on this show are RedChip client companies, so please always read our disclosures at redchip.com. Thank you for being with us today.